Hello, everybody. Welcome to episode number 79 of Chamber TV. My name is Laurie White, and I'm the president and CEO of the Greater Providence Chamber of Commerce. And it's a pleasure to welcome our distinguished guests here today. We are so thrilled to be joined by two executives from the oldest community bank in America, Washington Trust. So we're welcoming Ned Handy, Chairman and CEO, and Mark Gim, President and COO. So good morning, gentlemen. How are you doing today?
Great. Good morning, Laurie. Good morning to you. Thanks for having us on board today. And thanks for all that you're doing. These are great sessions. 79 is a lot.
Well, we've enjoyed being able to bring the message of our various chamber members out into the forefront and be able to talk about some issues that business people certainly are concerned about today, whether it be the source of their financing or what they need to do from a sales perspective going forward. There's just so many issues to cover, but we're so indebted to you to be able to take the time to talk about what Washington Trust is doing in the midst of this COVID. But before I get into that, before I get down to business, I'd like to start off each of our shows by asking, how are you doing? How's your family? Where are you calling from? How is life treating you? So Ned, welcome. You are a longtime friend of the Greater Providence Chamber of Commerce. You are chair of our Federal Affairs Committee, and we certainly miss seeing you around town.
Yeah, I miss people mostly. I miss the people I work with and that I used to see regularly at places like the Chamber. So, Laurie, thank you. And we're doing well. My family's doing well. We're at home. In fact, I guess it's a silver lining. I've seen more of my grown-up children and their significant others than I probably otherwise would have. So that's a little silver lining. But yeah, that we're at home, the bank, but for our really great front customer-facing people in the branches and some of our folks in the facilities side, the large majority of our employees are also at home, and I think that's where they ought to be. So we'll talk more about that in a minute. But thank you, and I hope you're doing well as well.
We are doing well here, and I'd like to bring in Mark Gim, President and COO. Mark, how are you? It's great to see you this morning. How are you doing? How's your
Nice to see you as well on a sunny Monday fall morning. I am in my house in Barrington, and if anyone on this podcast hears or sees people banging in the backyard, we are probably, like many of you, learning all the ins and outs of having to work from home for an extended period of time. Family is well, and we're happy and healthy, with the caveat that seeing each other every day for going on 7 months now is a little bit of a different adjustment, but primarily good. And I'm sure many of you viewers are feeling the same way. It seems so odd to think that it's been almost 7 months since we have been working in a new and very different reality. I think we've adjusted to it as well as we can, but we know that many of the people who this show is reaching are facing similar challenges.
And what's the silver lining for you, Mark?
Well, the silver lining, I think, is that you really come to appreciate the connections that you continue to have with people. As Ned said, you miss most of all seeing and interacting with people on a human, everyday kind of basis. Technology is great, but the importance of human connections has really been underlined by this whole COVID crisis. And as much as that may sound like a negative, it's really a positive because you come to realize how relationships matter.
Absolutely. So let's talk a little bit about Washington Trust's response to COVID-19 and some of the services that you are offering your customers. So Ned, let's go back to you and tell us a little bit about how the bank has been able to respond.
So early on, and sort of from a big picture perspective, we invoked our pandemic plan and our business resumption plan, like many others did, and did so, I think, very strongly, and very early in the process decided to send a large percentage of our workforce home. I think that's protected both our employees and our customers and kept them out of harm's way. And, I think both those constituencies appreciated that fact. And in fact, it wasn't until July 6th, I think, Mark, that we reopened our branches to in-lobby appointments. So, we took a careful route, Laurie, and I think that has served us well. And then I think just how we responded to our branch-based customers, our commercial customers, through all of the various federal programs, and we'll get into some detail. I think our team, despite being remote, just sort of took the bull by the horns and has been proactively engaging with customers and addressing customers' needs all along the way, and taking advantage of various programs to do that.
How are your customers doing during the course of this pandemic? You said taking care of customer needs, and I know everybody, at least within the chamber membership that we speak to, has a different set of needs and concerns. But I'm wondering, from your client perspective, what do you see as the most prevalent concern?
Yeah, so it's a great question. There's no doubt that every customer is unique and has their own set of circumstances, whether they're a residential mortgage customer or a small business customer, based on what industry they're serving or what business they're in. They've got their own unique set of challenges. And I think we've found through the various programs, whether it was the PPP loan program or our ability to defer interest or principal payments on certain customers for a period of time, I think we've had the tools to help them get through so far all of the challenges that they've faced. It's been very difficult. I mean, this has not been easy for anyone. I suppose there are certain companies that have fared well due to this challenge, but 99% of them have been challenged by this. And Mark, I think we've been able to find a solution again, at least through this point, for all of them.
Yeah, I think we have, Ned. And Laurie, to answer your question, COVID has changed the way in which we deal with our customers, as it has probably for almost all businesses. But although the world of remote and digital online interaction works very well and has worked for transactional business, the advisory component of what we do for customers has never been more important than it is today. Ned mentioned the PPP program, which was a very valuable way of getting funds in the hands of businesses who really needed to figure out how they were going to weather the COVID storm. What's really hard is knowing, what should I do? What are the options? How is the world changing? What new rules have federal agencies or government organizations come out with to help us? In the case of managing people's money, the financial future has become a lot more cloudy. So it's been extremely important for us to maintain a human connection. Of course, for the last few months, much of that has been digitally or by phone. Ned mentioned that we did reopen our branch offices at the beginning of July to normal walk-in traffic. But communication and navigating a rapidly changing landscape is really important. And the whole concept of calling your banker for a transaction is one thing. Calling your banker for advice is another. And I'm sure many members of the chamber can benefit from learning from each other. So probably the most important thing that we think we're trying to emphasize and provide is advice when you need it, and asking questions that we can help respond to in a, as I said, a rapidly changing landscape.
So this question, continuing with you, Mark, what do you tell customers about the PPP loan process and the forgiveness process and the promise of forgiveness?
Right. So as Ned commented, the PPP was complex at its outset. It was introduced in record time. And for many customers, just finding a place to apply and knowing whether they were eligible was one of the first gating factors. Now navigating the world of forgiveness is also changing. I think, Ned, we've had of the roughly 1,700 loans we've had, one has gone through the full forgiveness process, and we're still not sure what the timeline will be for when the forgiveness process will fully open up, what the thresholds will be for a simplified forgiveness process, and what will be more complicated. Probably when the program was introduced in late March and early April, we thought it would have been done fully, more or less, by now. But now, Ned, I think it looks like it is going to carry on into the first quarter of 2021. So again, we are trying to communicate consistently when we learn more information, so that both customers and their advisors, whether they're attorneys or accountants, will have access to the most up-to-date information as we can get it. And we have been in contact, I think, Ned, mainly at the state level, to make sure that we're getting the right information to pass on to our customers as well.
Yeah, Mark. Sorry.
There are so many programs out there. So let me just pose a hypothetical. What would you tell a customer who says, hey, I'm a customer of Washington Trust. My balance sheet is okay, but it could be a little better. Do you advise that we apply for another tranche of PPP money? And what about all the grant programs that Commerce RI is offering as well? How do you guide people through that maze?
Yeah, so I certainly would advise everyone to sort of educate themselves, and we'll help educate them on all of those programs if they're applicable for their business. The PPP was enough for some people, and that universe of customers we stay in touch with on a regular basis and make sure that continues to be the case. We had some PPP customers who also needed interest deferrals or principal deferrals on their existing bank loans. And so we were able to accommodate that way. And I think, Mark makes a great point about communication, staying in touch with these customers even more than we do so on a normal basis, to make sure that that what they thought was going to be the case, in fact, has turned out to be so. When they stretched the PPP utilization timeframe from 8 weeks to 24 weeks, that kind of stretched the whole program out, and we got into a mode where when forgiveness was, kind of started, we advised people to be patient and wait and make sure that you have all your paperwork right, and that you're applying for forgiveness at the right time. Of course, some of those customers just stretched out the utilization period, so they weren't ready for forgiveness right away. But I think in that interim period, when the PPP funds have been used and things haven't come full circle, some customers came to us for interest or principal deferrals, which we were able to grant. Some went and accessed other federal government programs. Not very many, though. I think people will, be advised to access PPP again if it comes out. I don't, to be honest with you, Laurie, I don't know if there's any restrictions on a borrower taking additional PPP debt if they've still got an unforgiven loan. That's a great question, one which I will educate myself on. But I think it's just one of many avenues that customers need to be aware of and educate themselves on, and of course we'll help them with that.
Mark, what in a cash flow crunch such as this, which many businesses are experiencing, in your advisory capacity at Washington Trust, what do you think is the most important piece of advice that you can give a customer today?
Probably one of the most important pieces of advice, whether it's in a business or a personal context, is, as hard as it is, try to think for the long term. No one knows how long the duration of the COVID crisis will continue, whether it's into just through the end of the year, or if it's into the spring or even summer of 2021. And first of all, a low interest rate environment has both benefits and disadvantages. For businesses who are able to refinance their loans, or for individuals who are able to borrow money against their home, it is a good time if you give access to money to be able to borrow it. On a personal level, as Ned said, the programs available to businesses may vary, whether it's at the state or federal level. But for homeowners, the rising value of houses combined with a low interest rate environment has created a chance to either refinance an existing loan or look to borrow more on a cash out basis. From a financial planning perspective, for those people in or approaching retirement, it has definitely changed the landscape because interest rates being so low, the safe alternative in the fixed income world to investing has dropped pretty significantly. So I would advise people to be aware of what borrowing options might be, including government or state-sponsored programs, to look at personal finances as a way of perhaps refinancing more expensive debt into a home loan, and to reach out to a qualified financial professional in terms of planning for retirement or managing money. Because this environment that we're in, Laurie, even if COVID goes away, the low interest rate environment and economic uncertainty may persist with us for longer than we think. And as a company, we've been around 220 years. Part of the reason we've been able to last that long is through thinking about the intermediate future as well as just tomorrow. So again, long-term planning and advice in a period of financial market uncertainty and education are the most important options, and we're certainly here to provide that.
Would you advise customers to borrow money since we are in such a low rate environment, even if they didn't particularly need it?
That depends on the need for cash. I think the answer can be yes in some circumstances. And Ned can comment on this. When the COVID crisis first began, we wondered whether or not businesses would take funds out just for contingency purposes to have cash available, particularly at low cost. It doesn't seem that has been the case today. But again, your individual circumstances may vary. Some businesses may not have a need for that. Others in hospitality, for example, may be more challenged and may be looking for more cash to ride out the winter months, particularly for seasonal businesses. For consumers whose jobs are secure, it may not be as big of an issue. But Ned, I think you may be able to give some color on cash usage patterns that we saw with businesses at the beginning of COVID and how that has played out since.
Yeah, I mean, I would just add to what Mark said, that certainly everyone should look for ways to take advantage of low interest rates. So whether that's building cash reserves by borrowing or just replacing existing debt with cheaper debt, I think people have had an opportunity to do that. You know, when we opened our branch back up in July, you know, I think we had increased foot traffic. We didn't see a reduction in other forms of utilization, but what we did see was an increase in deposits. We have seen saving rates go up a lot, and I think you've seen that across the country. Banks are flush with deposits, and I certainly hope that certainly I think some part of that is just people are spending less. I think people are you know, they're at home, they're not traveling as much, they're not going out to restaurants. So I think there's a fair amount of saving going on, and I think you know, people are benefiting from a little downtime in terms of savings. So we're seeing our deposit levels are up you know, significantly from a year ago, and you know, I think it will continue. People are taking a conservative view of life. I think people are thinking about what their long-term prospects are. A lot of the business customers that we're talking with are reassessing what their business is going to look like, you know, sort of post-COVID. If you're a restaurant, will you be at 50% capacity for forever, or will it come back to some other level of sort of normalcy? And so we're helping customers think through, you know, what their you know, total capital needs might be for their sort of longer term existence.
Mm-hmm. It's interesting. You should talk about the deposit levels in a more conservative environment for customers, you know, just taking a break, if you will. Along those lines, I was interested to see that not only are deposits up, but customers' credit scores are up too. So there's less borrowing in that field.
Well, one of the challenges, I think, Laurie, is it probably depends also on income and income distribution. Some are fortunate enough to be able to continue to work from home, and their jobs are not substantially different other than where they sit. For others who have been in industries that are affected by COVID in terms of layoffs and just reduced employment, those savings levels may be very different. And we are seeing, I think, that COVID has brought to light, among other things, sort of wealth distribution and to some extent, those who can't accumulate savings are put in a disadvantaged position, much more so than people who are able in a technology-driven era to work from home.
So continuing with you, Mark, let me ask you a little bit about the environment for borrowing and lending standards and underwriting standards. How has that changed?
Mm-hmm. Well, I think underwriting standards have tightened somewhat, really based on the view of the future and uncertainty, at least from a business point of view. From a consumer point of view, I think many types of loan classes have held up somewhat better than has been expected. For those whose memories of financial dislocation go back to 2008, 2009, for example, the housing industry and mortgage borrowers were hard hit. That really does not seem to be the case now. If anything, housing demand has gone up, both due to low interest rates and a relative lack of supply since the financial crisis. Ned, I don't know if you have anything else to offer on that.
Yeah, I would just say on the commercial side, Laurie, Mark runs our residential mortgage business. The commercial business, Jim Haggerty, who is at some of your board meetings, runs our commercial business, and he would say that pipelines are down a little bit, so demand is softened a little bit. Certainly, structure has been tightened, so I think we're underwriting a little bit more tightly than we would have pre-COVID. But I think we're still doing deals. We're still looking at real estate loans. Last cycle, I would say the notion of doing a commercial real estate construction loan in the height of the 2008 debacle, it just didn't happen. I think there are still deals that make sense. There's still some economics that make sense. So we're still in business, but the pipelines are down a little bit, and I think banks in general are being a little careful. What I will tell you is there's not a huge incidence of oversupply generally in the marketplaces. So yes, COVID, just because of its realities, has caused a lot of stress for certain types of real estate. But I think other than that, it's not an oversupply issue like it might have been in prior sort of recessionary times.
Yeah, that's really interesting, Ned and Mark. Let me just ask you a few more questions about the commercial real estate side of things. People ask us all the time, like, what's going to happen to these office buildings when people determine or employers determine that a great percentage of their workforce will continue to work from home? Is there going to be an impending real estate bubble, if you will?
So I'll start with that, Mark, and you can pick up. So I think urban office space is going to be more challenged than suburban office space. I think when companies do feel comfortable coming back to work, they probably will occupy more space per person. So they'll have to spread out more. So that sort of suggests that there might not be as much decrease in office space utilization because you're going to have to spread your employees out. On the other hand, if half the employees don't come back to work, there's the risk that companies over time, and leases are leases, they're contracts, so they'll have to sort of live out their lives, right? But at the end, depending on where a company is and where we are and where the economy is and where COVID is, tenants may reduce their needs, and I think we'll see some interesting real estate plays over the next 5 years where office space is converted to some other use, maybe urban office space, maybe residential, maybe some level of industrial for lower level space. Retail, retail obviously has been already challenged by the Amazons of the world and big box versus small local retail. So it's already gone through a transition. I think it's obviously being impacted fairly heavily in certain ways. Any retail plaza that's got a gym in it, any retail plaza right now that's got a movie theater in it, certain other types of tenants are struggling. My view of that is is very much helped by a vaccine and by bringing things back to whatever the new normal looks like. The office space discussion is an interesting one. I don't think there's an answer yet. I think urban will be more challenged than suburban, and I think we'll see some interesting innovations in real estate over the next 5 years because of that.
Mark, do you have a different perspective?
No, I think our Ned and I have talked about this quite a bit. Clearly, commercial real estate is affected in different ways depending on what sector you're in. So as Ned mentioned, whether it's retail or movies, that's one thing. If it's office space in Manhattan, that's one thing. If it's office space in Warwick or Cranston, that's another. One of the benefits, I guess you could say, that Rhode Island has gotten from the COVID crisis is it is not as heavily concentrated as Boston or Chicago or LA or New York may be. And so the commercial real estate impact in the markets we serve may be less than in others. And there is, I think, going into the COVID crisis, much less of a bubble feel, Laurie, than there was last time around. There will certainly be a slow reset, I think, of both values and income streams associated with real estate once the post-COVID reality becomes better defined. As Ned said, we found that we have the ability to work from home while the situation requires it. Whether or not all employees will want to continue doing that, some, few, and how different tenants of commercial real estate will deal with that has yet to be found. So I think we're not in a rush to judge or make predictions, but we do think that there will be a slow shakeout where those values and cash flows become reset, probably over a period of several years. Because I don't know about you or any of your listeners, but we're not sure whether or not the way we've learned to work for the last 7 months is the way we all want to work whenever we go back to business. Will it be different? Yes. How different? I think time will tell that.
Mm-hmm. That's the big question, right? Particularly since we don't know exactly the timing of a vaccine. We were very happy to have Dr. Jha from Brown University on Chamber TV last week, and he was suggesting that perhaps by March things might start to feel a little bit looser, a little bit better in terms of the vaccine response. So we still have a bit of a long road ahead of us.
Mm-hmm. And a road that we haven't been over at this season before. Recall that the COVID crisis really began to affect all of us here in New England in March when spring was just beginning. And so the outlook for some businesses, particularly seasonal ones in a state where travel and tourism and higher ed matters, is different. A different landscape going into the winter months than it is going into the spring and summer. And I think we would encourage all of your listeners, just as we try to think of this ourselves, think flexibly. We've had to really rethink how, for example, all of our workforce provide services to customers. More than 2/3, I think, Ned, began working remotely in March. Some could not work remotely if their jobs required them to be present. But you're forced to do things in a different environment. You're forced to really rethink processes. We were surprised very favorably by how quickly we were able to adapt to online tools, just like this show we're conducting now. But juggling that combination of work and personal safety priorities and flexibility really becomes key in this, because you're right. This, while 6 months from now, getting to the end of the first quarter of 2020 doesn't sound like a long time, it's almost as long as we've been in this.
The investment in technology too, in order to keep your processes secure and the cyber hackers at bay, et cetera. That is challenging for any organization, any company, but no doubt you have a specific and more real response to what you've had to do to invest in systems that protect your customers and your operations. So tell us a little bit about the thinking behind the technology response.
Laurie, that's a great point, and we were fortunate to be on a technology investment ramp a couple of years ago, for a lot of the reasons you just talked about, privacy, just upgrading our system in general. We actually went through the process of putting our core system into a hosted situation. So we didn't outsource it, but we're now hosted off-site in the cloud. By one of the leaders in the world in privacy and security. So those kinds of decisions and upgrading our desktops and our whole network really well before COVID has served us incredibly well during COVID. It has enabled us to work remotely as well as we have been without any real disruptions. And in fact, has enabled certain of our business lines to make improvements to the way they do business and the way they interact with customers while being remote, just because they had to discover capabilities of our systems that they might otherwise not have done. So I think that's our story. We feel, I guess, a bit fortunate that we started down that road before COVID. Certainly feel very fortunate to have ended up in a place where we did before COVID hit. For our customers, there's no question that technology investment is a challenge, and I think it's something that's been on everyone's list as something to focus on for years, and the speed of necessary and or maybe desired improvement has grown, and the speed with which it has to be considered has increased incredibly over time. So I don't think it's so new for customers to be thinking about technological improvement. Obviously, COVID sped that whole thing up a little bit.
Mm-hmm. And Mark, everything is changing so fast. The technology is changing so fast, and something that was state of the art 2 months ago is probably, an anachronism today in your world.
Yes, yeah, for sure. And being adaptable and flexible is really critical. I think one of the advantages, Laurie, that has come about in the last 3 or 4 years, and Ned mentioned our investment in technology leading into the COVID crisis, which was just fortunate timing. It is no longer necessary for a lot of businesses to try to buy and implement solutions by themselves. So hosted or outsourced solutions to what would be very complex issues at a business of 5 or 10 or 15 people have become a little easier to implement today online or through hosted services. Probably, again, the most important thing for those businesses to consider is, where do you get a good source of advice for what is available to me right now? We're able to do things today in an online world that none of us really knew we could do 6 months ago. And keeping up to date with those solutions really does require, I think, the good news is things are available. The bad news is that there are so many things that are available, it's very hard to navigate that landscape. I think we, though, are optimistic that Rhode Islanders and Rhode Island business people, being flexible and adaptable people, will be able to cope with the next however many months of the COVID crisis, just as they have over the last 6 or 7.
Mm-hmm. So we're talking about flexibility, we're talking about adaptability in the circle and the arc of what you are doing with your customers on a daily basis. What do you tell, let's just pick a category. You mentioned, Ned, a few minutes ago, retailers and their particular predicament with B2B and online. What are you telling retailers as an example about how to fortify their business to be ready for the next generation of consumer tastes and preferences?
Yeah, so it's a good question. I mean, first of all, we think our customers are as smart about their businesses as we are, right? We entrust dollars to them, and knowing that they'll pay them back because they're successful business people, entrepreneurs. But thinking about what I said earlier, thinking about what the future state of your business is. You go into or you pick up from a restaurant curbside, and they're using Square. They're using payment systems that are safe and are hosted usually by very strong providers. So thinking about how to improve your payment system, choose the right vendors. I think thinking about their real estate, and the amount of real estate they have and need, and what their future needs are going to be, so to the extent that we have small business customers that are real estate users, but we also have real estate customers who are landlords. Obviously we need to be careful in our commentary, but we try and provide sensible advice where we can, and we try and get some of our small business customers together to have a conversation from time to time about what's working well and what's not, and share best practices. It's and there's so many moving parts right now, Laurie, that it's actually a tough question to answer. I mean, there are so many unknowns coming into the winter, and just the timing of vaccine, the timing of what's going to happen in the elections, the timing of just the rules at the state level around COVID. I think there are a lot of unknowns. That's part of it's part of our frustration, frankly, and that we're all sort of waiting to see how the next shoe drops.
Yeah, Mark, is this like a counterintuitive moment perhaps for some businesses, where invoking the Warren Buffett philosophy of when others buy, you sell, and when others are selling, you buy? Is there a play there for some strategic businesses and some strategic
Yeah, I think there absolutely is, Laurie. And to build on what Ned just said, part of what we can try to help customers do is not just provide financial solutions, but help ask the financial questions. So the opportunity really is, we know at some point the COVID crisis will come to an end, and how long it takes science to come up with a practicable solution, it's a matter of time, and we don't know how long that time will be. But we will go back to a more business as usual life, and for all industries, the way the world interacts with each other may change in some ways after the COVID crisis, but what we do won't be different, and there will be opportunities in that. You asked a question a few minutes ago about companies worrying about needing cash, and we would point out that might be an important short-term need, and sources of credit are certainly a way to solve that. But try to ask the question, what am I trying to do with my business over the long run? That may seem obvious, it's trying to make money, but all businesses go through various stages, whether it's from starting up to maturing to transfer of wealth to, do I wish to sell the business? Do I wish to pass it on to my family? And so the solutions to those questions often go beyond just one transactional need. I need credit. How much of a rate are you charging on it? Or will you pay me on a deposit account? Really looking at your long-term financial future may seem like a luxury in today's environment, but we do think that by helping businesses and bank customers plan ahead, we may be able to give them enough information to put themselves in a better solution position for 2, 3, 5 years, as opposed to just the 2, 3, 5 months. And that's kind of the heart, I think, of what Washington Trust's value is to its customers. We certainly provide all the financial products and services, but we try to do it in a way that looks more holistically at what your goals are beyond just the short term. Mm-hmm. That may have been a very long response, but kind of keep your head up, looking more than 2 or 3 steps in front of you, I think would be our advice, because there will be opportunity in the future.
Yeah, so the word holistic is something that's exactly the word I was thinking of when you were describing the various services, beyond, taking deposits and servicing loans, the whole, the wraparound experience of getting a group of professionals together to help customers be able to think differently, get out of their own head, if you will.
Mm-hmm.
And this whole notion of perhaps being counterintuitive in this time is something that a lot of people may not have thought of, Ned. So you no doubt have been in those conversations.
Yeah, I think it's a great point, and because we have a sizable wealth management business and a sizable mortgage business, and we have a commercial customer base, and we can provide holistic solutions and do. I think the prospects of those solutions addressing today's issues are probably as great as they've ever been. So does it make sense to take out at these rates, to take out a bigger home equity loan on your house to feed your business the capital it needs right now? Do you are there certain things you should do on the wealth management side in your wealth management account if you have one? If not, should we go into a planning process? Should we think about, can we help you think about your total asset base, and including your business and the revenues or the salary it provides you as an individual, and look at that in the context of your current mortgage and your current wealth management accounts, and try and help you through that, or at other points in the economy, now the time to be a homeowner for the first time or not. Can we help you shift from a renter to an owner at these interest rates? And we're doing a fair amount of that for people that may not even be benefiting from what's going on in the stock markets today. So we've got a whole nice spectrum of customers that we work with. I think having those customers share with us the information that they have, trust us enough to provide that to us, trust us enough to have a conversation about, to use your word, holistic solutions, and then fit those into the various products that we have. We have those conversations all the time, and it's a kind of a bent towards customer care that I think puts us in the right place and enables us to create the right kinds of conversations with customers.
You mentioned the stock market, and that's an area that we haven't really touched too much on in this conversation.
Mm-hmm.
We've been talking mostly about commercial lending and the like, but I know you have a very serious trust practice that's been around for 220 years. So let's just couple of minutes talking about the environment today. So with the Fed keeping interest rates very low and fixed income being under strain, what are you telling your customers, Mark and Ned, in terms of how to shape their portfolio today?
So I'll take the beginning part of that question, Laurie. It's obviously been a surprisingly robust environment for U.S. stocks since the COVID crisis. Perhaps based on optimism about the timing of a COVID-related solution, although there are a lot of uncertainties, including the upcoming presidential election and related legislative implications for November. First of all, with interest rate environments, with the interest rates so low, it will require people to re-examine their long-term objectives. I think we probably all remember from 20 or 30 years ago, the idea of a 60-40 stock bond portfolio as being a good, sound way of diversifying your assets and providing an acceptable long-term return for retirement. That's challenged today because you can't get 3% or even 2% in safe areas of the fixed income market. So this, I think, again, requires the person asking the question to think about their risk tolerance and their time horizons. The short answer would be, well, you should move more into stocks and less into bonds. But that means a change in risk, and it should also lead the investor to ask the question, exactly what am I doing this for? And how long will I have to do this? Conversely, the part of the reason interest rates are so low is not just substantial support of a very accommodative low interest rate monetary policy by the Fed, but a lack of inflation, at least overall inflation, not just in the US, but in Europe and in Japan as well. So this low rate environment may not be temporary. It may go on for a lot longer than we thought beyond COVID. And so I think there's no one answer to that other than re-examine your own time horizons, your risk tolerance, and what your long-term needs really are, and work with your advisors, be they bankers or attorneys or accountants, to start reframing that question. And Ned, I think we've heard that asked more often now, just because the uncertainty created by COVID, even if stock markets are doing pretty well, has become a more common concern.
And
yeah,
parts of the world in a negative interest rate environment, Ned.
Oh, we don't want to go there. Laurie, I didn't hear the first part of your question. All I heard was something about negative interest rates. So that's my immediate reaction to negative interest rates.
Yeah.
There are parts of the world that you can't, you end up paying to have your cash stored by them, as opposed to getting a return on your investment. Yeah, no, so that's not somewhere that we want to go. I think we've got a strong enough system here with the Fed and playing a strong enough role that we will actively avoid that. I think that's part of the policy of being outward about keeping rates low for an extended period of time. And you heard the Fed chair ask Congress to hurry up and provide some more relief to small business. And I think all of that is aimed at keeping the economy chugging, and hopefully we see a response to that sooner rather than later, because frankly, I think we're not out of this, and our small business environment, lots of business owners need more help, frankly, not to mention states. And anyway, we can talk about that if you want, but I hope that gets done sooner rather than later.
When you bring up the Fed chair, which reminds me, it seems like a million lifetimes ago when you and I, Ned and Mark, we hosted Jerome Powell, the Fed chair, at a Greater Providence Chamber of Commerce event at our annual meeting. It was in November, so just under a year ago, and Chair Powell was very eloquent in describing the accommodative point of view that the Fed was to take, but little did he know how accommodative they really were going to have to be.
Right. Yeah. That's very interesting, and it was great to meet him, and I thought he was interesting and pretty positive about how things were going, and yeah, this is obviously an unexpected blow, but I think I think we were going to be in a low interest rate environment anyway for a while, given what you just talked about around the globe. And so I think, I don't think that element has changed other than, it doesn't seem normal to me to hear a Fed chair talk about 3 or 4 years out in the future of low interest rates, Mark.
No, it does not. But then again, we are not in an ordinary time, I guess. It's funny. I mean, both Laurie and Ned, I think back to 2008, 2009, and those were obviously very uncertain, turbulent times. In some ways, more related to the financial system globally than anything else. And thinking, well, at least I won't have to go through another crisis like that again the remainder of my professional career. But we all have, and yet I think, as Rhode Islanders and as Americans, we have been able to find collectively a way to navigate the path this far. And while the future is uncertain in terms of what it holds, our hope, I think, is that working together, we can all make it through whatever period of time it takes to get us to the other side of COVID.
Well, that's a perfect segue to the long and distinguished history of Washington Trust and your 220 years of servicing Rhode Island businesses and consumers. So tell us a little bit about how you would how you would judge the arc of your business and the lessons that you and your predecessors have learned in terms of weathering these shocks, which seem like they're going to continue on infinitum.
Yeah, no, we have a great sense of pride around the 220 years that Washington Trust has been in business. And yes, it was started by local businessmen in Pawcatuck and Westerly to provide small loans to people in need, and frankly that remains at the core of how we behave. That history is fun to talk about, Laurie, but I believe, and Mark's heard me say this before, that every one of us, every time we walk in the door, do so knowing that we're sort of entering an institution that's bigger than any of us, and whose history of providing support to Rhode Island and Rhode Islanders and Rhode Island companies is incredible and provides huge value to the state, and so we protect it, it's been a wonderful place to work and a great Rhode Island institution.
Mark, I understand exactly what Ned is saying, since the Greater Providence Chamber of Commerce itself was founded in 1868, so obviously not as long as Washington Trust in longevity, but the awe and the privilege of being able to stand on the shoulders of others that have weathered so many storms back, whether it be the formation of the American Industrial Revolution and the birth of industry that happened right along the Pawcatuck River down where you are, where you're headquartered. So that sense of, richness and tradition, and being able to be in it for the long term is definitely a special responsibility and a special privilege.
It certainly is, Laurie, and like the chamber, we are aware of history. In fact, as a history undergraduate and graduate student, it's probably the only thing I'm really qualified for, and as a Washington Trust banker. One thing that I would say that has helped guide us, as it has previous generations of leadership at Washington Trust and certainly future ones, is the sense of both consistency and keeping an eye on what it is that you are trying to do. We are obviously a public company. We are a top quartile performer in terms of comparing ourselves to other peers in the banking business of similar size and nature, and we're very proud of that as well. But really, the way we're able to achieve that is by doing a good job on customers' behalf and providing financial services and solutions that help them to achieve their goals. And ultimately, what does that is a combination of culture, knowing your history and what you're trying to do, stability and consistency, and the people who do it. And we've been recognized for a number of years as one of the best places to work, whether it's in Rhode Island by the Providence Business News, by Forbes, or by the American Banker. And you only do that by paying attention to how your employees are treated and trained, and to make them understand that their main commitment is to caring for the financial needs of the customers and communities that we serve. And the bank has gotten obviously bigger over the years. It's expanded its presence beyond just the Westerly Pawcatuck area where it started in 1800 to the rest of Rhode Island and Connecticut and Massachusetts, and businesses certainly do grow. But we haven't really lost sight that the charter was stated to provide those little assistances from time to time, which only banks can give. And that holds true today, and really may never have been more important than now. Listening and helping solve problems is still what we're all about, whether it was in the at the very end of the 18th century or in the beginning of the 21st. So although customer behavior and technology has changed, that advice and the human connection is what we think the culture of Washington Trust is all about. And we hope it continues to make us relevant and useful, not just for shareholders, but for our customers as we go into 2021.
And that culture starts at the top, Ned.
And Mark just described it so well. I will tell you one of the he just outlined our core values so nicely, but then you layer over COVID, and I will tell you that what we've seen is not only our employees taking care of customers with incredible levels of care, but also taking care of each other and caring for each other. As remote as they've been, the level of communication between our employees, the extent to which they've helped each other, Laurie, to provide those sort of holistic solutions to customers, despite being remote. I think the connection between our employees has in ways been helped by the challenge of being remote and the need to communicate more. And we talked about technology earlier, and I think we said, we've got the products and the technology that our customers need, but what we know is that it's our people that make the real difference. Mark talked about the human connection, and you've heard us talk about it. We really believe that while technology is critical and necessary, that it's the extent to which you can enable human connections and put your employees in a place to be able to have those. That's what has always made the difference for us, and will continue to make the difference. So we'll continue to support that certainly as long as we're around.
Yeah, so I think particularly for customers, small businesses that might feel very concerned about their own business and what they need to do to think not just long term but short term as well. The ability to be able to pick up the phone and to be able to talk to somebody without going through a whole circuitous series of prompts, and having the relationship, a direct relationship with someone that's trusted, in fact, could make all the difference in the world.
Yeah, absolutely, Laurie. I think you mentioned at the beginning one of the things that was a positive or a silver lining in the whole COVID crisis. And I had mentioned that, at least personally, it was a re-understanding of the importance of human connections. Technology is great, and the ability to order things personally online and have them delivered to you, whether it's by Amazon or by your local grocery store, is certainly terrific. And we all can avail ourselves of that. But what Ned and I probably put a premium on is the notion that a customer who calls our company has a chance of getting, not a chance, but will get a person and will be able to talk to the same person twice. And that person-to-person connection about someone who will listen to and take the time to understand your situation or ask questions if they don't, is what we hope people will continue to do, not just with us, but with one another, whether it's business peers or people in the community who you can make contact with and help out with. And I think the Chamber certainly offers a resource to your members to do that.
Mark, you make it.
Yeah, we are nearing the end of our conversation, so I just want to give you both just a couple of minutes to think through what some next steps are and takeaway messages for folks that are listening, and to talk about that relationship building and that personal touch.
Well, that's great, Laurie. Thank you. And thank you for having us on. We really appreciate that. And I just want to expand on something that Mark just said about the Chamber. And I should have mentioned this earlier when you were talking about various loan products made by various entities. And I should have pointed out that the service that you provide and the Chamber provides to Rhode Island businesses, with all of the information that you provide on such a regular basis, is just phenomenal. And you're as good a resource as there is in the state of Rhode Island for information and for education and for frankly for just help in general. So thank you for that. Yeah, we have a lot to add as we move forward. We're increasingly over the past number of years and into the future, we're relying on the Rhode Island economy, but economies outside of Rhode Island, and we may need to think about how to expand into those economies physically. We're very happy to have announced our East Greenwich branch. Buying brick and mortar to grow is a little challenging these days, with a lot of banks going in the opposite direction. But we think there are several very strong Rhode Island communities that we're not physically present in, and East Greenwich has been one of those. And so we've announced a new branch there, which we're excited about. We'll have that open, Mark, I think, towards the end of April. And so we're we continue to invest in Rhode Island and find Rhode Island to be a great market for us, where we have a third place in deposit share in this state, and continue to look for ways to grow that. But I think the future of Washington Trust is much like the history. We're going to be methodical. We'll be careful in taking advantage of this incredible foundation that we have to work with at Washington Trust. By foundation, I mean the history of the company, and we'll shepherd it for the next few years, and hopefully leave it in better shape for the next generation of leadership.
Mark, any closing thoughts?
Well, yes, and there are two. First of all, for those of your members who are listening to this, we would like to help in any way that we can. Banks are open for business, willing to do business, in much better shape as an industry than the banking industry was in 2008, 2009. And if we don't have a solution, we can at least help you frame the questions and get access to information. So whether the needs are retail, banking, residential mortgage, or consumer borrowing, business borrowing or depositing, or business banking, or wealth management, we would love the opportunity to help. The last thing I'd like to mention is that on the line of human connections, every one of the businesses who's listening to this cast has employees. And we found that in this time, making sure that you remain connected to your employees and coworkers really does have to be a constant priority. Even though we can work from home, and in some ways it's easier, people have a harder time connecting, and that can lead to a combination of fatigue and burnout. So as Ned said, we've been very pleased to see how our employees have been there for one another. And I would encourage all employers to try to do that. Isolation and just emotional health in a stressful time like this is such a rising concern. And staying connected on a human level and helping us all get through it together is the last thought I'd like to leave people with.
That's a very beautiful sentiment, Mark, and thank you for sharing that. And Ned, as the chairman and CEO, you always have the last word, so leave us on a high note.
Well, let that be. Thank you very much, Laurie. We really appreciate the time and the focus that you're putting on Washington Trust. We consider ourselves very fortunate to work for a great Rhode Island company, and as I said, we'll do our best to keep it chugging along and helping out Rhode Islanders, as Mark just referenced. It's our pleasure and a good fortune to be able to do so. Thank you, Laurie, and thank you for all that the Chamber does. Again, you guys are fantastic and a great part of the Rhode Island fabric. So thank you.
Thank you.
Thank you, Ned and Mark. We have a great team, and it's our privilege to be able to do this kind of work and to have a front seat and to be able to work with folks like you. So that concludes our discussion with Ned Handy and Mark Kim from Washington Trust. And I want to say to both of you, thank you so much for sharing your advice, your thoughts, and your guidance in terms of how we can all think about our businesses and our futures, not just personally, but professionally as well. So thank you for being with us, and happy anniversary, Washington Trust.
Thank you so much, Laurie. See you soon.